Friday, July 22nd, 2022, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at why Comex and the LBMA in London are nothing more than glorified bucket shops. Before I start though, I'd like to let you know that I did an interview yesterday with Jack Gamble from Nobody's Special Finance yesterday afternoon. He published it on his channel, and it's about what the ECB did yesterday. So I'm going to put it up in the cards and below in the description. I think you'll enjoy that. So I don't have to talk about the ECB today. Maybe a little bit when we look at the markets. And yeah. So now to Comex and the LBMA. And I guess it's to do, of course, with the gold and silver price manipulation that we've seen forever, I would say, or at least since the 1970s. Some people might ask if they're trying to manipulate and suppress the price, how come the price has gone up? For example, when I noticed the manipulation back in 2002, the price was at around $300 when I started buying physical gold. When I started looking into the gold market, and now we are at 1700. I think it's bigger than just the price. The suppression, the manipulation is to discourage the general public from getting into gold, and it helps, believe it or not, keep this fiat currency Ponzi scheme system going for longer. I think that's what it's all about. The bullion banks, of course, in the meantime, they make profits. Sometimes they have to get bailed out, of course, and that's what we're going to look at today. So first, I want to reference a book that I've recommended before. Haven't done it in a while, and it's not just for traders and people who love financial markets, but also for just anyone, because it's an interesting life story. And it's Jesse Livermore, World's Greatest Stock Trader, by Richard Smitten. Well, there you go. So why are we going to reference this book if we're talking about gold and manipulation and bucket shops? Well, because Jesse Livermore, he started out really young in the business, still in the late 1800s. I think he was about 14. He left home, which was a farm in Massachusetts, and went to Boston and started working, I think, at Paine Webber. He was doing the prices on the board, and then he started save some money. And this is what it says here on page 27. And we're going to look at what a bucket shop is, because I think it's important that people know what it is. I'm using the term. So it's on page 27. So it says, after 6 months of doing his job every day, eventually making a series of paper bets in his notebook and keeping track of them, he was still missing a crucial part of the equation, and he knew it. He had yet to buy his first stock. He knew that unless he actually purchased a stock, he could never know how he would handle himself. Like a gambler who has never made a wager, it was only talk and speculation until he slapped his money down. When a trader made a bet, everything changed, and he knew it. Then and only then did the trader enter the heated jungle of emotions. He knew that he would always have his intellect under control, and it was a strong one. What he did not know was whether he could control his emotions. He had watched the customers at the Paine Webber office, and he knew it would be his emotions that would make or break him, particularly greed and fear, the two devil emotions of the market. You either control them or they controlled you. The time had come for Livermore to buy a stock, but he had very little money. Where could he buy a stock cheaply? Livermore would later marry and have 2 sons, Jesse Jr. and Paul. He recounted to them on many occasions where he found cheap stocks, the bucket shops. So this is the interesting part that, in my opinion, really exposes the true nature of the gold market in London and Wall Street, the Comex, LBMA. I'm not going to use the words to describe what I think they are, but by reading this about bucket shops, you will know what I mean. Arnold Rothstein, known in the underworld circles as the brain, was a genius with money. He started out as a gambler, but after a fantastic string of successes, he became an underworld king and lived like it. He was accused of many crimes, among them fixing the 1919 Black Sox World Series. There's a great movie about that, of course. I think it's Shoeless Joe Jackson. His fortune was vast. His financial tentacles reached into every vein of American vice. Among Rothstein's many holdings were most of the bucket shops in the major cities of the United States. A bucket shop looked like a broker's office. It had a gallery for the customers, a chalkboard to record the stock quotes, and an active stock ticker spewing out the daily trades of on an almost instantaneous basis. Sounds familiar, all the screen trading today, right? This is not just about Comex and LBMA, I would say. It's about the whole financial system. It's all a bucket shop, I would say. Let's continue. But it was more like a horse betting parlor than a true broker's office. At a bucket shop, traders could play the market on a 10% margin, while Comex is more like 5%. It's even less than 10%. In other words, traders needed to have only 10% of the price of the stock they wanted to buy. The rules were simple. Put up 10% and make a bet by buying a stock. A ticket with the buy number would immediately be printed and given to the purchaser. This ticket would indicate the time, the price paid for the stock purchased, and the number of shares purchased. The purchaser would watch the quotes, and as soon as the stock lost 10% of its value, the shop moved in quickly and swept away the money. Conversely, if the stock price went up and the trader won, the trader went up to a clerk and who marked the ticket stub with the price of the last trade on the stock ticker. Then the trader went to the cage window to collect the money. It was a sucker's play, and house won 95% of the time. So that's what a bucket shop was. And I would say that the Comex and the LBMA are bucket shops. And the house always wins. And who's the house in this case? I would say it's the bullion banks and the central banks that stand behind them if they need to. And we're going to look into that today. And I know about futures markets because I worked as a futures and options broker in London for 20 years. My clients, of course, were not retail clients. They're institutional clients like banks, funds, treasury officers, and corporations. So I never spoofed the market for my clients. If I ever did that, I would be in trouble. Because we never took positions for our firms, we only took position for our clients, and it's not the kind of thing that we did. But it was hard as well to spoof the market when the futures trading was done on the floor of an exchange. It's become easier on a screen-based system. By the way, I never worked on the floor itself. I was always an office broker, and I was in contact with my colleagues on the floor, and that's how it worked. So one of the reasons I'm talking about this is because we've seen recently that JP Morgan, they're being, they're traders, precious metals traders, are being tried here for spoofing the market. And spoofing is just basically when you show an offer or a bid much bigger and you don't plan to trade to scare people off. And it's something very common for the bullion banks to do. Is this what really helps manipulate the price of gold and silver? Partly yes, because if they spoof at key technical levels, they can build a sentiment. If we break key support, these guys know where all the stops are. It can eventually affect the market, I would say. But it's only one of the tools they use for manipulating the gold and silver market, and all other markets for that matter. Now, I wanted to show you a Wikileaks document, and it's from 1974, just before the United States made it legal again for US citizens to own physical gold. So yes, this document, was leaked by Wikileaks, and it's from 1974, December 10th, just a few weeks before the gold Comex futures was created on December 31st, 1974. Gold was going to be made legal on January 1st, 1975, and its communication correspondence between the U.S. State Department and bullion dealers in London. I'm going to put a link to it below in the description, and you can look at it. It's very interesting. But this is what they say here in part of this document, and I'll read it to you. To the dealers' expectations, those are the dealers in London, the bullion dealers, because London was and still is the center for bullion trading, will be the formation of a sizable gold futures market. Each of the dealers expressed the belief that the futures market would be of significant proportion and physical trading would be minuscule by comparison. Also expressed was the expectation that large volume futures dealing would create a highly volatile market. In turn, the volatile price movements would diminish the initial demand for physical holding and most likely negate long-term hoarding by U.S. citizens. So there you go. It's basically a bucket shop. It's not a real physical market. Yes, there are times when there is physical gold and silver delivery on Comex, but it's an exception. And with that, we're going to move to an article that I covered when I was in Italy about Peter Hambro, who was one of these bullion dealers in the 70s. And the Hambro family, of course, is a very influential family in the city of London. They're kind of maybe a step below the Rothschilds. And this is what he said in this article, and I'll put it below in the description as well, right? The only way to achieve the cover is by smashing the price of physical gold by the alchemical production of paper gold with the help of the futures markets and the connivance of the alchemists, the bullion traders. Yes, that includes me. I was deputy managing director of Mercado and Goldsmith. Managed to create an unshakable perception that ounces of gold credited to an account with a bank or bullion dealer were the same as the real thing, and much easier, old chap. You don't have to store or insure it. That's what they used to tell their clients. Once investors swallowed this stupefying pill, it was easy to sell them gold that simply didn't exist. Bucket shop stocks or shares that didn't exist. Of course, there were wary investors who found it hard to believe that the likes of Mercado, Montague, Rothschild, and Sharps-Pixley were undoubted counterparties and wanted to be assured that the gold would be there when they called for it. Easy, we said. Don't bother to pay for it. Just give us an initial cash margin bucket shop and agreed to a variation margin, and our paper promise is as good as gold. This was the simple derivative futures ETFs. If you thought the price would go down, you could sell as gold you didn't have and margin the trade in the same way. Then along came a raft of options and other products and the derivatives market. For that is what this chimera was called, started to spiral like a tornado. And here's the interesting part. It shows that without the central banks being ready to lease the gold out, and this is speculative as well, what I'm going to tell you. We all know that Gordon Brown sold half the UK's gold in the late 90s. The rumor has it that it was one of these instances where someone actually wanted the physical and they didn't have it. So speculation. Anyway, to make the bogus gold look even safer, the Bank of England was quietly willing to lend the London gold market members physical gold in the event that things got a bit tricky and our vaults were empty. When one of the members went bust, the other clubbed together, and with the Bank of England holding the ropes, the customers were bailed out. But I didn't get a bonus that year. So just think about what Gordon Brown did. It was very shocking at the time. I think it was 99, and he pre-announced it, which had the effect of also driving the price lower. Who would that help? Well, it would help the bullion banks that were short the paper and didn't have the physical, right? And then the Bank of England went on to, even if, and then the bullion banks could cover, and then unfortunately the Bank of England and the government had to dishoard that gold. Or else it would have looked very suspicious if they just pre-announced it, the market went down and said, oh, we're not going to sell it again. So that's what it's all about. And that's why, the gold price manipulation, the suppression, the spoofing, it's all part of a much bigger agenda, I would say. It's an agenda to keep the public away from physical gold, and that's what that WikiLeaks document said, the dealer said. It's about discouraging people from jumping out of the fiat currency system. So hopefully that will have explained to you or help you understand better what people mean when they say that the price of gold is being manipulated, because a lot of people who have never worked in the markets don't understand it. But it's just a simple betting mechanism, and unfortunately the Comex and LBMA, the fact that they're run by the major banks in the world and they have their backs covered by the central banks, has helped them control the price. Unlike in the bucket shops in the days of Jesse Livermore, the bucket shops could not control the market because it was a sideline. It was a criminal sideline. Yes, they couldn't get big enough, of course, to control the market. And that's how deep, the integrity of our financial markets has gone. We're basically been run by a bucket shop merchants all the way, and they're all the way at the top. And I would say this applies to all markets really nowadays. I was speaking to a friend of mine. He used to be a futures broker on the Comex, on the floor, because when I used to work in the city, the firms I worked for, they did not have traders on Comex, and we used to call another broker to do deals for our clients. And he told me yesterday, all the financial markets are now like not real. They're all bucket shops. And funnily enough, one of the guys they talk about in the Zero Hedge article here, which I'll put in the description below, a link to, who used to be one of his clients, one of the JP Morgan, the head guy at JP Morgan. So there you go. With that, let's quickly look at where the markets are this morning. It's 8:45 a.m. London time. We've got spot gold at 17.1570 or 17.16 actually, is down a couple of dollars. The price action in gold, these gold futures or paper gold, was quite encouraging yesterday. We had what's called an outside day, in which we made a lower low from the previous day, and then we picked up and went through the previous day's high. So the bar is like engulfing the previous bar. That's quite positive. Of course, you never really know what's going to happen in the short term, but it's encouraging what happened yesterday in the markets. Yes, the ECB surprised, but listen to my video, my interview with Nobody Special Finance. That will help you hopefully understand what's going on there. So the low overnight has been 17.12. Silver is at 18.75, down about 10 cents. High's been 93 and the low 71. The Dow futures is down 75. NASDAQ future is down 104. And the S&P future is down 20. FTSE is up 16. Eurostoxx 50 is down 11. To the currencies, sterling is down almost 2/3% at 119.27. The euro is down 7/8%, so the euro falling back down 101.40, and the dollar is up 1/4% versus the yen at 137.67. Dollar is up 1/4% versus the Swiss franc 96.89. Dollar is up slightly versus the yuan at 6.77. Let's look at the dollar versus the ruble. Dollar's down 1.5% at 57.18. To the rest of the currencies, Aussie dollar down 0.5%, 69.02. Dollar up 0.2 versus the Canadian 128.88. And the Kiwi dollar is down 0.5%, 62.20. Let's quickly look at the general commodities. WTI crude is down 0.5%, 95.77. Brent crude is down 2/3, just below 100 at 99.88. High-grade copper is up 1/3 at 3.31. US nat gas is down 1% at 7.74. Quickly look at the bond markets. Italian 10-year yield yesterday actually rallied, which means people sold bonds, and we went up to 3.75 even after the ECB announced its rate hike of 50 basis points, and also the fact that they said they will do QE for Italy to help keep their yields down. But this morning we've come back down, and we are at 3.54, down 3 basis points. It's still above the recent low, just above 3%. To finish off, let's look at the US 10-year yield. Yes, we had very weak economic numbers yesterday, Philly Fed, so yields dropped. They're dropping this morning as well here in London. 10-year is now down 7 basis points at 2.84. And so, and the 2-year is dropped 2, it's at 3.08. So the curve has inverted even more, which is a bad sign for the economy. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And with that, I wish you all a great rest of the day and a great weekend. Take care. Bye.